Welcome to Keeping Up with Trends. This is Fedrazak, Senior Trading Strategist here at CMTrading, and we're joined with your host, Sergio Davids.
Hey, Fred.
Hey. Oh, starting very serious, Sergio.
You know what? It's because I am boiling here in Cape Town. I know it's only 23 degrees, but there's about 74, 75% humidity. It just sucks the life out of you, man.
Do you realize that you are so determined by your weather? It's either freezing in the winter, it's either hot in
Yeah,
the summer.
yeah. It never used to be like this. It used to be Mediterranean. But I remember reading an article about a few years ago that Cape Town specifically is becoming more tropical. So, I'm not used to this. I used to have chilly winters, which was fine, and hot summers, but not humidity, man. I
Humidity
mean,
is hard.
it's like Thailand, you
Yeah,
know?
no, humidity is hard.
Yeah.
You just
So, yep.
you take a shower and you
Yeah,
feel
you're
like
right. Come out of there and yeah, nothing's changed. So, I was thinking we could move away from some trading news and deal with some issues that some of our clients have posted on social. They've posted some comments and questions about trading, specifically about things that have happened to them, like what's a stop loss, how can I avoid, you know, trading mishaps. So I thought we could go through a list of some maybe some 5 common trading mistakes,
sure.
and you can help our traders, deal with that. So I'll run through the list very quickly and then we'll deal with them one by one. So starting off with number 1, trading without a plan. Number 2, trading too much too soon. 3, emotional trading. 4, not using a stop loss order. And number 5, which to me is very interesting, revenge trading.
Okay,
So,
so
yep.
some of the ones that you've mentioned already really go. There's like you've already hit the subcategories. I would say
Oh,
there
okay.
are the categories. There's 2 or 3 categories. I would say of why most traders don't succeed. And this is the issue: is that it's hyped up so much about the markets. Hey, open up a trading account and start trading the financial markets. And it's an exciting, it's exhilarating. It's a drive, it's an impulse, but
Yep.
it also has to be done with some amount of um, plan. Like we used to
Well,
have this big
yep.
sign on our desks,
Yeah.
okay? A big poster. If you fail to plan, you plan to fail.
Right.
And
And
that is really, I mean, if you look at all these categories all this list that you just listed, I mean, this is
yeah,
the common ones, but these are the subcategory ones, like I said. So,
yeah. So, dealing with what you just said, planning, right? Number 1 is trading without a plan. Can you explain what that means?
yeah. Okay. So let me ask you a question. Um, when Jeff Bezos
Yeah.
started Amazon,
Right.
how did he go about it?
Uh,
Do you
I
know the story?
believe a not so insignificant loan from his parents.
Right, but okay, but I'm saying like you're talking about the money. I'm talking about how
Right.
did you create Amazon? Like how was that?
No,
How did it come about?
yeah, I'm unfamiliar with the
Okay,
history.
so he was working at some sort of investment house, making a very good salary, and his boss put him to the test of coming up with different entrepreneurial ideas. And he took some time off and he saw this bookstore and he's like, every time I go to the bookstore, I'm limited by how many books I can buy. Even when I go to Barnes and Noble, which at the time was the largest bookstore retailer in the United States, I'm limited of how many books I can buy. Now,
Right.
a book business is not really a sexy business between you and me, right? It's not a high tech. You're not
No,
selling
no, it's not.
Ferraris. You're selling
Right, right.
books.
Sure, you're selling books.
Okay, house and gardening. All this. Come on, like it's
Yeah.
not.
Yeah, it's not anything, like you said, it's not attention grabbing, it's not sexy. But
So
it
he
sells.
came up with an idea. He came up with an idea. Well, why should I be limited to how many books I can buy? If I put it on the internet, I could sell as many books as I want. And that dawned on him. Now, at that point, he had to set up a plan of how to execute this. He
Right.
realized that he had to get a website. He was able to facilitate e-commerce, which at the
Right.
time was like,
No, it was nothing. It's not even in its infancy.
yeah, I mean, like that was just,
It was
um,
a complete game changer.
it was a complete game changer, and almost not only a game changer, it was just like, you needed someone who, and he's related himself as this. You needed someone who was an explorer,
Right.
someone who would be willing to explore new places. And that was what he did. And then he came up with a business plan. That's my point. This whole point of this whole
Yeah.
story was this one
Well,
point of a business
well,
plan. You have to have
you,
a plan. You
you
have to
say
have
a
a
plan,
strategy.
right? But you'll forgive me for wanting to go into detail, right? When you apply it to trading, what does that mean? I want to trade stocks. I want a piece of Apple, right? Surely it's just a case of just, taking out position, etc. What do you mean by plan?
Okay, so first of all, you've got to take an inventory about who you are.
Right?
It's more about who you are. Trading the financial markets is more about a expression of unsurfing and peeling who you are as a human being, what your beliefs are, what your integrity values are, and why do you want to trade the financial markets? I mean, you want to make money, right?
Right.
And I say this in the webinars all the time. Why do you want to trade the financial markets? Because I want to make money. Well, you could do many other things and make money. Why are you doing this?
True.
Well, because it's a fast buck. Well, there's other things that are fast buck, okay? And normally you don't
Yeah.
want to do something that's a fast buck, because normally if it's fast in, guess what? It's fast out. So, it has to be a deeper understanding of why you want to trade the financial markets. And then you develop a plan. Like, what's your edge? And what is the elements that are going to give you a higher probability of making money in the markets? Now watch this. If you buy something or you sell something, okay?
Yeah.
You have a 50% chance of making money or
Yeah.
losing money,
Yeah.
right?
Sure.
I bought something. What's my outcome?
Okay. It's 50-50. I mean,
50-50. But if
sure.
I could move it one dial to my favor, then I have already put myself in a better position.
I see. Okay. So suppose you learned a little bit about the market. You tried to haggle. You got an insider, tip.
Well, it's not an insider tip, because I've seen, like, for me to invest in certain things now, okay?
Right.
If after I've seen some of the repetitions of seeing human nature and seeing how things kind of develop and the trajectory that they go by, then it's quite clear, that I have a 51% chance to be in my favor versus 49 chance. It's not insider trading. It's not, oh, I'm getting tipped off. Oh, Amazon's going to beat its target.
Yeah.
It's just based on the information that I have in front of me, based on my understanding. Okay, I'm making a calculated decision. So you could be Warren Buffett, who spends 80 to 90% of his time doing research and resourcing his material,
Yeah.
and then making 10% of that time executing trades, right?
Yeah.
And that's how he makes money. Or you could be a day trader and look for several opportunities throughout the day and, take advantage of the markets that way. So there is more than one way to skin a cat, as they say. And that is what the financial markets are. And most people don't get to that level
Yeah.
of unpeeling that onion to the point that they have, a system in place.
I think this also leads nicely to number two uh, on the list, which is trading too much too soon. Now, I remember from previous, webinars of yours where you always state that you take smaller positions when you're just starting out. But I think it's very easy, like you were saying earlier about the type of person you are and why you're trading, to go all in too fast.
Yeah, so I mean, like, a lot of times it's that younger, and I accuse this of myself. There's this want to get rich, buy a Ferrari. You know, that's usually a younger man's play, right?
Yeah,
Um, of wanting to like fast money, fast life, fast girls, fast lifestyle. But at a certain point, even if you get to that, okay, you realize that that fast life, comes to a halting scroll, and then you're forced to really deal with the situation. Um, and it's interesting. One of my mentors, who was a very successful retailer for electronics in Atlanta,
right.
very successful guy. Um, and he's probably in his 80s. He's around my father's age, but really cool, like a really down to earth guy. And he said to me, he said, anytime I made money and I came back to my accountant, he had a fantastic accountant. His accountant would say to him, he would get worried when it was fast money. Like if you had a 10 to 20% growth every year, so okay, that's healthy. But if you have 150% growth, then I'm scared for you. He would tell him. Because at that point, you don't know what's going to be the next
Yeah,
year.
that's interesting. But I mean, I can understand. Yeah, I can understand that logic. So for traders, though, is it a case of, you know, um, not wanting to blow your entire portfolio, rather play it small?
Well, so initially there should be like let's say you opened up $1,000 account,
Right,
okay? And if you lost that, first of all, what I tell most traders is that don't ever put money in the markets you can't afford to lose.
right.
I know it's counterintuitive, but
No, it makes sense.
you've got to be able to walk away from it like as if it's nothing. Now, there are people that can swing $60 million in a day and they're fine with it. They walk home like as if nothing.
Nothing happened.
There's this one trader. I actually saw it uh, on YouTube.
Yeah,
And I saw this one trader. He is a commodity trader in Texas. He trades oil, natural gas and oil.
yeah,
And they hedge their positions on physical commodities as well. So it's interesting, and he plays a very interesting game. And in the pandemic, in the start of the pandemic, when oil went down, he
yeah.
lost something like $60 million.
Jeez.
And he says, I didn't
That's
stress.
insane.
That's insane.
Wow.
60 million
But
bucks.
you touched on something I think very important there. I don't think people realize, you shouldn't be putting money that, you can afford to lose in the markets. And it's so easy to get wrapped up into something and try and think of it as a, get rich quick scheme. And trading isn't that. And you were saying if I open up $1,000 account, yeah, I'd want to buy, Amazon shares or Nvidia. Why wouldn't I trade the biggest thing I can with however much I have?
So, because you were looking for the long game, you're not looking for the
Yeah,
short game. And
exactly.
so this guy, by the way, he made
Yeah.
back all his money and then
Oh,
some.
wow.
So it's like, but that
That's
that is a
incredible.
mature trader. That's a trader
Yeah.
that was within his boundary of his comfort zone. Now, for me, to lose $1,000, that's my comfort zone. I could lose a
Right.
$1,000 bucks.
Right.
Now, if I didn't have a steady income tomorrow and I lost $1,000, that would not be in my comfort zone, right? So it
Right.
has to be something that you are, you could bounce back from and
Yeah.
say, okay, like, yeah, does it suck to lose $1,000? Yes, it does.
Yeah.
But could I be okay with it? Could I ever replenish it? Yeah, I can. So
Yeah.
I feel comfortable enough to say, okay, I lost $1,000 today. It's not fun, but I'm okay with it because I have the And it's more than that. It's for me, it's a complete reframing of what it means to me to lose $1,000. When I lose $1,000, I look at it as a learning experience, not as something negative.
And I think it also speaks to your, emotional maturity, which leads us nicely to number 3. What is emotional trading?
So emotional trading is, and it's going to pivot into revenge trading. Is
Sure.
that you're not making a trading decision based on a factor that you decided through some sort of rational decision making. Okay, you made the decision from emotions. Now, there are times, and they're few and thousand far betweens, that sometimes when you make an emotional trade, that it actually works to your favor. But 9 times out of 10,
Yeah.
it
It's not
doesn't.
gonna.
Because what ends up happening is that you responded to the market in an emotional, unbalanced, unregulated state, and that usually continues throughout the lifespan of that trade or that position that you're taking into the markets. And it lasts much longer after you've closed that position and you keep on going on your emotional trading state. So you want to have some sort of concrete written criteria as to why you enter the market, why you exit the market, and when and how. You have to answer these questions to yourself.
And also, you need to have the patience and emotional maturity to get into this game. I mean, I don't think a lot of people understand that trading is a good trader is someone who can make more wins than losses. Correct?
Well, yeah. I mean, see, this is the
I mean,
you
loss
could
is a part of the game.
right. So this is the example I give. So let's say you have two traders. You have John and Pat.
Right.
Okay. So John makes 10 trades. 9 of them he loses. One of them he makes. Is he a profitable trader?
Well, I suppose it would depend on whether that final trade he made up for those losses.
Okay, now look at
Then
Patrick.
he's a pro.
Patrick makes 9 winning trades and one trade he loses. Is he a profitable trader?
Again,
All right.
it come yeah. I think it's the same sort of metric. What are your wins? Are your wins covering your losses? But I think even more fundamentally than that, I don't think people are aware that you will lose, and we're not prepared to face that at all.
So then I mean, this is the ABC of trading. I mean,
Yeah,
this is like, it's like just like
it,
you open up a business, right?
yeah. I think
A
that's the
gro-
other thing. People are afraid to fail,
So I'm saying,
so
so
some
okay,
people
that's
don't
a
even
beautiful
bother.
example. That's a psychological issue.
Yeah.
People are afraid to be wrong. People are
So
afraid to fail.
So, so let's move on from emotional trading, right, to revenge trading. So, what's that about?
So that's a subcategory, right, of emotional trading, right?
Right,
It's an emotional. So that's happened to me. I don't know how many times, and it comes from anger, right?
right,
Um, and anytime we're going to a feeling, we're
mm-hmm.
really referring to our child's state of ourselves,
Right,
right? So
okay,
like, it's like a child. It's like, my 6-year-old gets a tantrum every so often, right? He shouldn't
right,
be getting, but he's
right,
already phased out of that. But you have a toddler who goes
yeah,
through a tantrum.
sure,
There's nothing you say or do that will stop that tantrum. You just have to let him just phase it out.
phase it out, yeah.
And there, you know what? There's a teenager who goes through the same tantrum. Teenagers and toddlers, the same thing, by the way. Just
Yep,
one of them are less dependent on you, and they think better than you. They think they
because
know
they know
better than you.
everything, yeah.
But I'm
At
saying,
all
like,
of 13,
but
yeah,
but but that is what happens. Is that the market should have done? I should have. Market is wrong. I'm right.
right.
Market was wrong. I'm right. And I'm going to prove it to the market. That's
By
revenge trading.
trading more and
By
trading the
trading
same
more
way.
and losing more. Are the emotions coming out?
Jeez, it's almost as if yeah. I mean, you've seen it happen in gambling as well.
Yeah.
They
And
lose they
that's
lose a
the
hand at
example.
poker. Well, my hand's coming. Why not just keep? um, playing,
Doubling down.
doubling down and doing the same way. So what advice though? How can I break that kind of cycle?
Ah, okay. So this is why I say to you, you need to know who you are first, and you need to accept it. So, I mean, now we're going into psychology. So
Right.
step into my office,
Sure. Let
lay
me let
down
me
on the
let
couch,
me lay down on
Sergio,
the couch.
and we'll talk
Dr.
about all
Fred,
the
tell
trauma
me
you went
yes.
through childhood and how your parents did you wrong and kids beating you up in school, and we'll work you out. Don't worry. So, but
Thanks,
that's
man.
what it is. So number one, you have to know who you are. You really
Right.
have to know your attributes, your strength, and your more importantly, your weaknesses.
Okay.
And that's really a very important. And people go through life not knowing either one. And people, for some reason, try to prove their weaknesses and not use their strengths.
Yeah.
I don't know why that works that way, but people are often there to try and conquer their weaknesses, which doesn't make any sense because it's much harder to fix because they're not strong in that particular area. It's like an
Yeah, and
introvert
I also think even, when growing up, we're always fixated on failures rather than, successes.
because that was imbued by how our
Y-
parents looked at
Yeah.
failures and successes as well.
And the weird thing about it is, if you think about it, there's no such thing as strengths and weaknesses because your weakness might be somebody else's strength. It's just how you use it,
So it's
you know?
you're saying a really important thing, and I heard this from a friend of mine about 20 years ago. He was really very, very, very smart, very smart. One of the smartest guys I've
Right.
ever came across. And he said to me, "Your biggest weakness is your biggest strength, and your biggest strength is your biggest
Biggest
weakness."
weakness. Yeah, because it can be used against you. Like, they might say that, oh, this one's quite open. He's quite open and he expresses himself. Right. But it's the way he expresses himself and the way he's open can be used against him, you
Right,
know?
they can lead him into
So,
trouble.
exactly. Doesn't know when to shush, you know? So, it can happen. And I guess, I mean, I think we're definitely going to unpack more of these common trading mistakes. We'll do a part two. But to end things off, though, number 5, what is not using a stop loss order?
Okay, so um, I've given videos on Facebook on this. I've done webinars on this. I've done seminars on this. It's just like it's like traveling in a Ferrari, 160 kilometers per hour. I don't even think that that's fast, right? I'm thinking more miles per hour, 150 miles per hour, without a seatbelt. Would you think that that's a advisable thing to do?
No, not at all. And yet,
So
sadly, I've seen way too many YouTube and TikTok videos showing exactly that.
so I'm saying so trading without a stop loss is like, you know, driving at a ridiculous speed without a seatbelt. It's a disaster waiting to happen. So one of the things you asked me, how do you avoid some of these psychological ailments? So if you know that you have anger issues, if you know that you have revenge issues, if you know that you have mm, rationalization issues, meaning, oh, I lost this much. Okay, I mean, I only said that I would lose this much, but you know what? It doesn't seem so bad. Okay, maybe I could lose a little bit more. That type of thing. Keeps on
Yeah.
moving the
Yeah.
line in the
Just keeps on
sand.
going. Yeah.
So if you know that that's the case, then, for sure you should be the one who's implementing some sort of boundaries for yourself. Like if you're an alcoholic, you're going to
Right.
try and make sure you don't go to that party or even
Exactly.
come
Yeah.
close to that, bar. So you didn't even allow yourself to be tempted because you don't have a decision. At that point, you're not even given the opportunity to make a decision because you're an alcoholic or
Right.
that person is an alcoholic, right? So you have to put yourself in a position if you are one of these type of individuals that do these things, You have to put yourself in a position that you don't bring yourself to. And the only way to do it is setting boundaries. So there are three types of stop losses that I've broken it down to. There's a monetary, psychological, and a technical. So a monetary one is just a number figure. I make, let's say, $100 a day. I don't want to lose more than $50 a day. Simple, right? It's a monetary. I'm down on the trade $150, I'm out. Okay?
Yeah, I also feel like it ties in nicely with emotional trading. You know, if you know you don't have the emotional maturity to handle a loss, you better have a stop loss order in place.
So it's interesting that you say that, and you talked about like the fear of failure, the fear of making a mistake. One of the guys that I used to trade under, he gave us the advice that you should just assume that your trade is wrong and set that stop loss and allow that loss to happen as a expense for doing business.
That's a good way to think about it.
So if
You
you're
know,
right, so if it's losing, I don't know what your parameters are, but if it's losing $20 in order to try out a trade, okay. So that's what it cost me to try out the trade. If I opened up a grocery store and I wanted to sell products in this grocery store and I wanted to make money. So I know that I'm not going to make money on every single item in the store, right? On bread, on milk, on butter. I know I'm losing money on those items because they're not carrying the weight of that store. But guess what? Something is coming into that store and they're not just buying bread, butter, and milk and they're buying other items also. They're buying peanut butter, they're buying jelly, they're buying chocolate powder, and more, or now you know what I eat for breakfast every day, right? But I'm saying like that's exactly, and those grocery stores are making money on the margin of those
yeah,
other exotic items, not the staples.
sure,
So that's the same thing with trading. You've got to look at it as a business and you have to treat it as a business. And I think that that's really fundamentally the biggest mistake most people make is that they don't realize that they're starting a business. They just think that they're going to be lucky because they're special. And we're
exactly.
all
Get
special.
rich, get rich quick. But you need to put in the time. It's a discipline, you know, and it requires learning, it requires experience and time.
But it's very much like being a surgeon. You know, surgically speaking,
Yeah.
you know, surgeons don't spend a long time. You know, those really professional ones, they don't spend a long time in the surgery room. I mean, unless they're doing a very complicated procedure, right? But they because all the prep stuff in order to do what they do has already been done before they even arrive. So let's say he's in open heart surgery, right? So he doesn't
Right.
go into and opening up the chest and doing all that. That stuff is already done by the time he gets there. He's just doing one or two incisions and doing one to
Yeah, there was a lot of prep work ahead of that surgery.
so that's exactly what happens there as well. So that's important to note when you're trading. It's the same thing. Like there's all that prep work you do before you're actually setting up a trade, and then you do the actual trade. We used to say on the table, this was the other major line. It was these two lines. Did you earn the right? You had to answer that question before you took a trade.
Hmm.
Did you earn the right?
You earned the right. Hmm.
You know, like if you're one of these guys that have come from very humble beginnings and you put in the effort and you will actually create that self-confidence by itself because you've earned the right to.
Sure. And I think it's a good way to test someone's skill slash emotional maturity. Just that simple line, will make me question myself and my skills, and then I'll say, yeah, I've earned this. I put in the work, I put in the hours. I should make this trade. And I think we'll put it to our listeners after this. If they want more trading pitfalls, because I mean it's a huge topic and we definitely should unpack it more. But I think we'll leave things there. Thank you, Fred, for all your awesome advice and insights on trading.
My pleasure, Sergio.
Cool. I'll see you on the next one.